Good evening YouTube, it's Crypto Tell here, and tonight we're just having a very quick chart chat and moving average breakdown as requested by a few of the members of the team. I'm not going to go too much into this because it's the fourth time I've recorded this video. I'm having real issues uploading it, so I'll do a longer video tomorrow hopefully when I've got a bit more time. So moving averages, why do we use moving averages? What's the point of moving averages? Well, basically moving averages plot the close of the last candles for the time frame. So here this is a 10 moving average, so the last 10 candles, this is where it closed. And basically we just like them because they're very good indicators of where price might be going next. A bit like technical analysis, I suppose. Everyone's got their preferences. Like for moving averages, like I've got my colour preferences. I always do mine all the same colour all the time. I don't know why I do them this colour, it's just the way I've always done them. So do what works for you. We don't normally have 4 on there, but just for the sake of purpose today, we're going to have 4 on here. This is the XRP Tether pairing on the Stormgain platform. So like I said, I'm just going to make this video very short and sweet because this is the fourth time I have recorded it today. For some reason, I just don't know what's up with the computer system and why it's mucking around so much. Also, I haven't got my microphone. It got damaged and I've got to wait till Friday for another one. But that's a different story for a different day. Anyway, today, like I said, we're doing moving averages. We need to think like a robot. A lot of robots trade crypto because they're easy. So basically we want to trade like the robots and where the big money is. So here we've got a 10 for crypto. I like a 10 and 20 moving. Some people like a 20 and a 50. Obviously the longer the moving average, the more reliable it's going to be. As you can see above here, we've got the 200 green, so technically we should only ever sell when we're below the 200 and only ever buy when we're above it. But obviously these candles do need to retest that 200 moving average. So like here, if we'd sold beneath the 200, at what point do you then think, right, it's time to buy? So like I said, it's retested the 200, it's gone through it. So again, it's gone up, it's come back down, so it's going down. So we can see here that it's obviously going to try and retest that 200 again, because that's the moving average thing seem to cling to the most, and it's the slowest time frame, slowest moving average. Excuse me. So that's the one that we pay the most attention to, really. But day trading, we just want crosses. So here we've got 50 and a 200 cross, or some people call that the death cross, some people call it a golden cross, depending if you're long or short. Like here, we'd call that a death cross because that's a short indicator. If we go down here, it hasn't, like I said, this is golden cross. So if you had got in the markets here on this cross to buy at 29, you would have probably been in a very nice profit, taking that profit. Like I said, we've had highs of 30. So again, not mega amounts of movement. This is only a low time frame, but the higher the time frame, so if we go to the 4 hours crossover here, you would have got in here. Wow, look at that profit. It's gone from 20 to 31, or we peaked at 32. So you cannot argue that these are useless, these indicators. Yes, they do lag, but they are very reliable. I said the 50 and the 200 more than anything. But again, no, even we'll scroll out and we'll zoom in a bit, sorry. So here, if we'd used our blue and our yellow, which is our 10 and our 20 cross, we would have got in at the same sort of time, probably a bit before the golden cross. Oh no, the golden cross was before that. So again, we would have brought, and then we had a little blip here for a sell, then a buy, then a sell. Come down for the buy, the sell again. It's all good for the buy, and then we're coming up here closing for the sell, I believe. So on the 4 hour, we could be retesting this. We don't know. Obviously, we're retesting the 20 by the looks of things for a sell. We're going to retest the 50 again, another big moving average crossover. But again, if we're just paying attention to the 50 and the 20, which a lot of people do for stock market trading, on a 4 hour time frame, which is what we're on, so that would have been your indicator to sell. So you would have wanted to sell when that crossed somewhere on that candle there, you would have probably took your profit down here. So now with this cross over here, you'd be looking to buy, whereas obviously on our faster moving averages, we're looking to sell. So be interesting to see how this one plays out. I have taken a short position purely on the 15-hour time frames. On the 15 hours, like I said, we just crossed for a sell here. Again, the 15 and 20s cross for a sell. Sorry, a buy there. Cross for a sell. Cross for a buy. So again, the 15 and the 20 are going to be crossing for a sell very shortly, I believe. So if you just go over to the left-hand side here, short position, bang it. Oh, sorry. Left click the mouse, click on this itself with the left-hand side. You can drag it. Again, we want to stops around the 30. Targets around 29.5 because we do like a bit of risk reward, so we could modify that even further, but again, just as we zoom out a bit, that's not totally out of whack for stop loss and take profit. So we try and get a bit of a better entry in here. I'm just going to put a couple of horizontal lines in here just to show you that obviously XRP seems to be trading in a bit of a range. So, like I said, we're going to move that up ever so slightly. We'll move that. What we'll do, move the risk down a little bit, move the entry up a bit, move our target down a bit. So these moving averages are good if you're in a bit of a range. So as we scroll out, you can see this is quite a good level of support. At the top here, quite a good level of resistance. Obviously, we're taking a short, so technically the top is the support, the bottom's the resistance. But again, that's another day for that. So there's no reason why this trade will not go back down to test that support. We've had, obviously we broke through the support here, and this turned to resistance. Touched it again, wicked down to it here, broke through it again. So there's no reason why we can't see another touch of that before breaking back to the upside again. Yeah, but another thing we can add to our chart is the indicators. They're called oscillators, and the relative strength index. So down here, they're set at 14 RSI. I don't know why. It's just like a bog standard setting. I don't know anyone who changes that 14. I don't think there's a need to. Excuse me. But basically, when we get to the top here, we're classed as overbought, so you want to sell. So obviously it's hit here, it's gone right back down. Over here we're oversold. So as you can see, right down here we're well below the 30. So not only have you got this indicator of the charts here, we'll zoom that in a bit just to make it a bit easier to see. Obviously the change of direction of candles, it sort of tallies up with selling, buying here, which you wanted to buy here. So we're looking at selling, so we've sort of almost had a tickle of the 70, pointing upwards. So like I said, again, I've set this a little bit further away, so we want the candles to form. So we want that really, realistically, we'd like to see the RSI go up, touch the 65, 70 mark, and then come back down to sort of trigger us into the trade and take our profits when we are down at the sort of 30 mark. Anyway, I'm sorry this video has been a bit short and sweet, but that is just a very basic moving average strategy, I suppose you'd call it. You can use, like I said, add the RSI. All your indicators are up here. So you want trends, scroll down, moving average. You can get exponential and weighted. They're too technical to go into on a short video like this, but all you need is the moving average. Click that 3 to 4 times, depending how many you want. Then go over here, click on your settings, your length, like I said, 10, 20, 50. Realistically is all you need, or 200 is just really there just to show you that it's there. And then you click style, click your color, scale it up a bit so the lines are a bit thicker. Okay, sorted. Again, indicates if you want your RSI there under the oscillators, scroll down, relative strength index, and that will bring up this beauty down here. Again, it's just really to confirm the trade and the trend that you're hoping to catch. Like I said, some people purely only look at this to take trades. I don't look at nothing above it, because they believe obviously if it's overbought, sorry, if it's overbought up here, it's going to go down. If it's oversold, it's going to go up, and that's how they live their trading careers. You need to find what works for you. Because like I said, there's nothing wrong. If you're on the 50 and you say, right, anything between 60 and 40, I'm going to trade. Anything I'm touching a 40, I'm going upwards towards the 50. Anything I'm trading on the 60 going down. Like I said, you still catch quite a lot of movement every day, just sort of trading between that tiny range. It's not something I'd recommend, but there's no reason why you can't do it with a lot of due diligence and practice on your demo account. Everything's for free. And that's the point of demos. Anyway, I've been CryptoTel. I hope you enjoy this very short, sharp video, and hopefully it uploads. And thank you very much, and I'll catch you next time.